You know, when a huge bank like PNC drops its earnings report, it's way more than just a report card for the company. It can actually tell us a lot about the health of the entire economy. So today, we're going to dive into PNC's latest numbers and really break down the story behind their absolutely record-breaking year in 2025.
And hey, don't just take my word for it. The message coming right from the top from CEO Bill Demchak is one of total confidence, a successful year by virtually all measures. That's a pretty big claim, right? So let's dig in and see if the numbers actually back that up.
All right, here's the first big number that jumps right out at you. $7 billion. And just to put that in perspective, that's pure profit. We're talking after every single expense and tax has been paid. It's just a massive figure that tells you right away that 2025 was an incredibly strong year for PNC.
Okay, but if you're a shareholder, this is the number you're really watching. Earnings per share. And it shot up by a whopping 21% from the year before. Basically, it tells you how much profit is behind every single share of their stock. And a jump like this? That's a huge sign of financial strength and just how efficiently they're running the business.
Okay, so here's our game plan for breaking this all down. We'll start with those record-breaking headlines. Then we'll get into how a bank like PNC actually makes its money, how they're growing, and, crucially, how they're building a solid foundation by managing risk. And then we'll wrap it all up with a look at what's next for them.
All right, let's kick things off with Section 1, a record-breaking year. I mean, the numbers are obviously impressive, but they kind of make you wonder about something more fundamental.
Right, but where does all that record revenue actually come from? It's easy to just see these giant numbers and not really think about the mechanics of it. So let's peel back the curtain a bit and take a look at the bank's engine room.
And that brings us right into our second section, how PNC makes money. If we really want to get what's driving the success, we have to understand the two main ways a bank like this brings in cash. Okay, so you've got two sides to this coin. First, there's net interest income. This is the classic bank stuff, right? They make money on the spread between the interest they pay you for your deposits and the higher interest they charge people for loans. Then you've got non-interest income. This is all the money they make from fees for all kinds of services. Think asset management, investment advice, and yeah, those credit card fees. And this is what's so cool. It wasn't just one side of the business pulling all the weight. Both of them grew, and grew nicely. Net interest income hit $14.4 billion, and non-interest income came in at $8.7 billion. So you see strong growth on both fronts. And that kind of balanced performance, that's exactly why they had such a monster year.
So think about it. If you want to grow that interest income, you've got to do one key thing. You've got to lend more money, which leads us perfectly into Section 3, Growing the Bank, where we're going to take a look at their loan book.
And this table tells a really interesting story. Check out commercial loans. That's money lent out to businesses, up a solid 5%. But what's kind of fascinating is that consumer loans, mortgages, car loans, actually dipped a tiny bit. So what does that tell us? It means the real engine here was business growth, which is a really important signal. That strong performance with businesses pushed the whole loan portfolio up by 3% overall.
But this always brings up a really important question. When a bank is lending out more and more money, does that mean it's getting reckless? Are they just handing out money to anyone to pump up their numbers? For any bank, getting this balance right is everything.
And that question is the perfect lead into Section 4, building a strong foundation. See, it's not just about getting bigger, it's about getting bigger the right way. So let's look at how PNC handled its risk while it was expanding.
Okay, before we go further, we need to get our heads around this term, net loan charge-offs. Basically, this is the amount of money from loans that the bank has pretty much given up on collecting. It's the bad debt. So obviously, you want this number to be as low as possible.
And here's the kicker. This is the amazing part. PNC grew its loans, but the quality of those loans actually got better. Their net charge-offs, the bad debt, it actually dropped by 29%. This is an incredible sign. They were lending more, but fewer of those loans went sour. That right there is what you call smart, disciplined growth.
All right, let's look at one more key measure of how solid this bank is, the CET1 capital ratio. Now, I know it sounds super technical, but the idea is actually pretty simple. Think of it like a bank's emergency fund or its safety cushion. It measures how much high-quality capital they have socked away just in case things go south.
And for PNC, that ratio is a really strong 10.6%. That's way above what regulators say they need, which means they have a seriously strong foundation to handle any rough patches in the economy.
Okay, so we've seen a record year.
we've seen balanced growth, and we've seen smart risk management. So that brings us to the big question in our final section. What happens next? Where do they go from here?
Well, for one thing, they are definitely not resting on their laurels. I mean, right at the top of 2026, they went ahead and closed a big acquisition of FirstBank. That's a huge sign that their strategy is all about continuing to expand and grow.
And what does all this success mean for the people who actually own the company, the shareholders? Well, PNC is sending a ton of that value right back to them. They've announced a really healthy dividend, and they're also planning a massive share buyback. Look, when a company does both of these things, it's basically shouting from the rooftops that it's super confident about its financial health and what the future holds.
So this is the thought I want to leave you with. A bank like PNC, its health is often seen as a bellwether, right? A sign of what's happening in the broader economy. So when you see a report like this, one that's this strong, with businesses borrowing and paying back their loans, what does that signal for the economy in the year ahead? It's definitely something to think about.